Welcome to Regulatory Ramblings. Our podcast today is brought to you by the University of Hong Kong's RegTech Lab, the HKU SCF FinTech Academy, the Asia Global Institute, and the HKU edX Professional Certificate in FinTech, with support from the university's Faculty of Law. I'm your host, Ajay Shandasani. The overarching theme of today's episode is the announcement recently by U.S. President Donald Trump that the country would create a Bitcoin reserve, a veritable Fort Knox-style depository comprised of several select cryptocurrencies. In fact, in our initial Spotlight segment, we'll be chatting with Andrew Fei, a Hong Kong-based partner with the law firm King & Wood Mallesons, on developments in digital asset regulation in the U.S. and what they mean for our region. Following that, we'll have a lengthier chat with the doyen of all things Bitcoin and fintech, Henri Arslanian in Dubai, on what the Trump administration's actions towards virtual assets will mean for the Middle East and the world more broadly, from a market's perspective, as well as in terms of policy. Henri is the co-founder and managing partner of 9Bucks Capital Management, one of the largest institutional-grade crypto hedge funds globally, and the first crypto hedge fund to be licensed by Dubai's Virtual Asset Regulatory Authority. He's also the host of the Future Money podcast. But first, in early March, the Trump administration announced a crypto strategic reserve for the country. It's a major milestone, yet the way it was executed raises many questions, such as why some coins were chosen and not others. Bitcoin makes complete sense, as does Ethereum and SOL, but the inclusion of XRP and ADA will likely be questioned. And with that, we turn to Andrew. Andrew Fei has over 15 years of experience in the areas of financial regulation, digital assets, fintech, structured finance, syndicated loans, and debt capital markets. Based in Hong Kong, he's been with the firm of King & Wood Mallesons for a decade. He's been quoted as an expert on various topics in the international press, including the Financial Times, the New York Times, the International Financial Law Review, Risk.net, and locally, the South China Morning Post. He holds an LLM degree from Harvard Law School and a double first-class honors Bachelor of Laws degree from Cambridge University in the UK. There, he was ranked second in his class. He's licensed to practice in New York and Hong Kong. In addition to his full-time legal practice, Andrew also teaches a course in banking law at the University of Hong Kong's Faculty of Law. And with that, Andrew, thank you so much for joining us.
Thank you. Thanks very much for having me.
So, in terms of recent developments in U.S. crypto law and regulation, what should we be aware of?
So there's actually been quite a lot of activity since the 20th of January. Hard to believe it's less than 2 months as we speak, but a lot has happened. As you know, the previous U.S. administration had taken a position towards digital assets and crypto that probably was not what people would describe as friendly. The new administration has essentially taken a 180-degree turn and is now embracing not just crypto, such as Bitcoin, but all forms of digital assets together with AI. So a lot of things has been happening. I think it's probably good to break it down into different themes or different components, and that can be largely divided based on different regulator or regulatory spheres. So obviously, it started off with the Trump administration issuing an executive order on digital assets. So it's important to note that even though people colloquially refer to it as the crypto executive order, it actually covers more than just traditional crypto assets, also covers all forms of digital assets as well. That executive order really set the tone, the overall tone for the new administration in terms of its embrace of crypto assets, public blockchains, stablecoins, and other types of digital assets in all aspects of the US and global economy. So that set the tone. Not a lot of detailed policy, obviously, because it's a high-level high-level executive order. But then a lot of different other agencies and departments within the US government went to work quite quickly to develop and flush out some of the details. So the first to do that is actually the SEC, so the Securities Exchange Commission, which obviously is a very important regulator within the United States. It largely, as its name suggests, regulates securities. But as many listeners know, the definition of securities is very, very broad under US law. And at least under the previous SEC's approach to enforcement.
Are you referring to the Supreme Court case of SEC versus Howey and the Howey test of, the great catch-all is there's a list of what's presumptively a security, stock, bonds, things like that, the things we normally think of as securities, but also the great catch-all test seems to be the investment contract test that they've laid down in that case.
So you were absolutely right. I am referring to the Howey test, which has obviously attracted a lot of attention. So you're absolutely right. It's the definition of securities is broad under U.S. law. It not only includes the enumerated types of traditional securities like stocks and bonds, but there is this concept of investment contract, which the U.S. Supreme Court has interpreted quite broadly to essentially include any type of investment of money or value in a common enterprise where there is a reasonable expectation of profits from the investors, which is to be derived from the entrepreneurial or managerial efforts of others. And it's a fairly broad test and can potentially have broad applications, especially to new innovative arrangements or investment-related arrangements such as tokens. And that has created quite a lot of uncertainty given the way the previous SEC had administered the securities laws, an approach which has been commonly referred to as regulation by enforcement, which is to say that instead of coming out with very clear, workable, practical guidelines that clearly delineate the dividing line between tokens that are securities, because admittedly some of them are in fact securities, and the vast majority of them, some would say, which are not securities. Instead of giving very clear guidelines, the previous SEC, some would argue, took the approach of essentially bringing enforcement actions, and you would have to read between the lines of its enforcement actions to find out what it really thought were and were not securities. And in any event, it had a very expansive view of what constituted a security under the Howey test, which made it quite difficult for token offerings and related Web3 or crypto projects to really take place. And part of the reason for that is even if you had a project that operated outside the United States, it's difficult to absolutely ensure, especially once these tokens are traded in secondary markets, to absolutely ensure that no U.S. investor touches these, right? And U.S. securities laws, as you know, because of their very broad extraterritorial application, any type of offering around the world, you would need to conduct a very thorough U.S. securities laws analysis to make sure that you're not inadvertently breaching those laws. And these are real risks as opposed to potential or theoretical risks, because the previous SEC has in fact brought enforcement actions against the likes of Coinbase or the NFT platform OpenSea. I guess the good news for the crypto industry is that a lot of those enforcement actions have in fact been stopped or dismissed voluntarily by the SEC, which again is sending a signal to the market that the SEC now wants to take an approach of not regulation by enforcement, but really regulation through listening to market participants, listening to their views, understanding the market, and then coming out with clear, workable guidelines on what is a security and what is not a security. And by providing that clarity, it provides a compliant path forward for the crypto industry. So that's largely the SEC side. They have, as part of this effort, established a crypto task force which is in charge of providing that level of regulatory clarity. And again, just indicative of its much more inclusive, open to industry input perspective. Commissioner Hester Peirce, who is in charge of that task force, has issued a statement setting out 48 questions, right, which is quite a lot of questions, seeking a public comment on 48 questions, which are the top of mind issues that the task force is considering in relation to largely the dividing line between securities and non-securities in the crypto context, but even beyond that into, crypto custody issues, net capital rules for crypto, when you have an SEC regulated entity engaging in those activities, et cetera, et cetera. And then what the task force is going to do is to hold a number of public roundtable discussions where industry participants are, invited to discuss, debate, and have a communications and have a conversation, real substantive conversation with the SEC about these issues, so that these public comments are taken into account when the SEC seeks to provide that additional clarity, which is very, very important. And then we have already seen some, I suppose, specific regulatory steps in this regard, which is quite friendly to the crypto sector. The first is an SEC staff statement largely confirming that meme coins generally would not be considered securities. They wouldn't be considered securities because they're not stocks and they're not bonds, obviously. But even under the Howey test that we mentioned, they don't really create a reasonable expectation of profits because everybody knows they're kind of entertainment or collectibles. Nobody really takes them that seriously. And in any event, any increase in the value of meme coins wouldn't be due to the entrepreneurial or managerial efforts, of the promoters of the meme coins. It was largely due to market speculation and other things. So that was quite an important clarification out of the SEC staff to at least begin to draw some boundaries to the extent of the U.S. securities laws. The other thing that the SEC had done, which is again fairly early on into the new administration, I believe the first full business day of the new administration, was to repeal a fairly controversial accounting standard called SAB 121. And it's very technical, but the accounting standard essentially had the effect of requiring U.S. public companies, including the largest bank holding companies and financial institutions, which are all public companies, to record any crypto that they hold on behalf of their customers. So not their own crypto, a crypto that they hold on behalf of their customers for custody purposes, to record those as a liability on their balance sheet. And that was a very unfavorable accounting treatment, which again, for the regulated banks, translated into fairly intolerable regulatory capital requirements for those banks. So the repeal of that accounting standard is quite important because it paves the way for a lot of the major U.S. financial institutions to enter into the crypto custody space, which is very, very important because one of the themes, and we'll probably return to this theme throughout today's conversation, one of the key themes of crypto that we're seeing is this institutional adoption of crypto, right? So it's not just something that individuals or small companies play around with as an alternative asset. You have serious asset managers, fund managers, pension funds, governments, we'll talk about that later, investing at least a portion of their portfolio in crypto and digital assets. And every time you have institutional investors, they don't want to do their own custody, right? They've never done that with traditional securities either. They've always turned to a bank or another regulated financial institution to provide essentially third-party custody solutions for their investments. So the same thing with crypto. So this repeal of SAB 121, as I said earlier, really removes that regulatory or accounting hurdle and therefore allows the big U.S. financial institutions to properly enter into the digital asset and crypto custody space.
Okay. it occurs to me though, coming at this from a Hong Kong perspective, for the longest time, the monetary authority here, our de facto central banking regulator, had said that cryptocurrencies, virtual assets, these are not money. They are digital commodities, and you trade them at your own peril. Looking at then from the U.S. perspective, it's surprising the CFT did not take a more assertive role right from the start. The SEC did, and then they kind of ran with, they kind of ran with that ball, and that's why people in the industry are irked because they're like, no, we don't want to be held by last century rules that were more tailored towards securities and banking. Uh, but again, the SEC took the lead. The other thing is that if you examine the record, President Trump was not sold on crypto during his first term. He was not very sanguine about it. In fact, he said disparaging things about it. It seems that only now, with the passage of some years, he's come more under the influence of, shall we say, the tech bros, the billionaires with a stake in crypto, like Peter Thiel, like Mark Andreessen, like Elon Musk, that he's come around to it, um, which is a great seg into my next question, which is then, what do you make of President Trump's decision to create a U.S. crypto reserve?
Yeah, sure. So the crypto reserve has this idea, this concept has been talked about for some while now, including during the presidential election campaign. So this, I guess, finally came to fruition a couple of weeks ago when there was a formal executive order signed by President Trump to order the establishment of the strategic Bitcoin reserve, together with the US national digital asset stockpile. So technically, there are these two slightly different concepts. One is the strategic Bitcoin reserve, and the other is the US digital asset stockpile. The treatment of the two are somewhat similar, as we'll see later. There are some differences, but largely similar. But I think the reason they distinguish between the two is Bitcoin, given its market share and its significant trading volume. I think it's fair to say that out of all of the digital assets out there, it probably is the one that has the where one can appropriately attach the label strategic to, right? Whereas the other digital assets, you could describe them as just generally digital assets that could be part of a stockpile, but perhaps not really escalating to the level of strategic importance. So the order does distinguish the two, and it is well known that the U.S. government, as well as certain other governments around the world, already have quite large holdings of Bitcoin and certain other digital assets. Largely, in the case of the U.S. and certain other jurisdictions, coming out of criminal and civil proceedings where a lot of those
Assets, yeah, assets, usually like Silk Road case and whatnot.
Yes, absolutely. So I think it's been reported that the U.S. has about 200,000 Bitcoin, but that number, is going to be verified. And in fact, the executive order requires the government agencies to conduct an audit, right, to really count just exactly out of all of the different departments, because they're not all with one particular agency or department, but across the U.S. federal government, just exactly how many bitcoins are being held, and then for that to be centrally managed largely by the U.S. Department of Treasury. And then it is a hold strategy, which I think the industry generally is the crypto industry is generally a strong proponent of. So it is a reserve or a stockpile in the sense that those are going to be centralized within under the auspices of the Department of Treasury, and generally would not be sold, right? Would be continue to be held by the United States, just like other types of reserve assets. The other key thing about this executive order is obviously with all U.S. governments, there is a conscientiousness and sensitivity about not using too much of taxpayers' money, right? There's obviously a lot of debt already. So there is a idea and a requirement that the Treasury Secretary and the Commerce Secretary in the United States are authorized to develop budget-neutral strategies for acquiring additional Bitcoin, provided that those strategies do not impose incremental costs on American taxpayers. So the idea is the U.S. will maintain a Bitcoin reserve, but any potential expansion of that reserve would only be done through budget-neutral ways that don't create additional burdens for taxpayers. So that's quite important. And I think looking beyond the United States, this will probably set in motion, if it hasn't already, similar approaches taken by other governments around the world, right? Because when it comes to digital assets and when it comes to other, strategic investment trends, the U.S., given the size and the influence of its government and its financial markets, does set the tone for a lot of other things to happen around the world. And already you are seeing other governments around the world, either before and even more so after this arrangement has been announced by the United States government, to indicate that they are similarly looking into, if not already, in the process of acquiring Bitcoin, acquiring other digital assets, to similarly build up their reserves or stockpiles of digital assets. So that has started a trend for governments around the world. And obviously, whenever governments are pro a particular asset class, you'll see pension funds, institutional investors, sovereign wealth funds follow suit. So as I said earlier, one of the themes we're going to talk about today is this institutional adoption of crypto and digital assets. So I think the US, having taken this step, is really going to accelerate that institutional adoption even further.
It's interesting to hear you talk about the approaches of other countries. I mean, China already has, I think, 190,000 Bitcoin due to seizures from a large domestic Ponzi scheme called Plus Token. Smaller countries like Bhutan, El Salvador, the Czech Republic have Bitcoin reserves or in the process of building them up. Whether or not it's going to encourage others to follow suit remains to be seen. But yeah, I mean, a key deterrent for many had been the traditionally strict anti-Bitcoin position of not only the U.S. under Biden, but also American-led organizations like the IMF, the World Bank, and SWIFT, on which many smaller countries depend. And I kind of wonder that, yeah, I mean, on balance, it's good news, but the inclusion of some coins over others, that selectivity leads. It opens the administration up to charges of favoritism. I mean, in the time we've got left, I just want to ask you, I mean, is there anything further you wanted to add? And what are your thoughts on the recent crypto summit at the White House? What was it for? What did they achieve? Your impressions before we end today's session.
Yeah, sure. Let me talk about two things briefly. One thing we didn't talk about that much yet is stable coins, and that is quite important. So I'll briefly touch on this. So the US, just like in Hong Kong, is in the process of developing its own proposed stablecoin legislation. And that is quite important in terms of what the new administration sees as establishing US's dominance in the digital asset space, right? So previous administrations and other governments, you talked about central government or central bank digital currencies. The current US administration is not a big fan, as let's say, of CBDCs, the central bank digital currencies, but they really see using stablecoins because, the most popular stablecoins are probably going to be pegged to the US dollar, and therefore will have U.S. government treasuries and U.S. cash or U.S. bank accounts as reserve assets. They really see, U.S. dollar stablecoins and the greater use of U.S. dollar stablecoins in the Web3 crypto space as a way of maintaining the strength of the U.S. dollar and ensuring that U.S. government debt continues to have investors. So that's quite an important development in the United States. And we saw that the Senate Banking Committee recently has passed or approved the Genius Act stablecoin bill for it to then progress further in the legislative process. So that I think that is quite an important key development in the digital asset space in the U.S. On the crypto summit, I think that is quite an important meeting. Obviously, parts of the meeting was publicized, the opening speeches, and then later on, it was not open to the press, obviously. But I think that meeting, if anything, sent an important signal that all of the U.S. government across all of the different departments, because a lot of the different departments were represented at the meeting, are serious about hearing the industry's input and coming out with coherent, comprehensive regulation and clarity about crypto. And it's in that sense, quite an important signal, because under the previous administration, you really didn't have that kind of an arrangement whereby the president, together with all of the senior regulators and cabinet members, sat together, invited the entire crypto industry to come in and voice their views, voice their concerns about the current state of crypto regulation. And I think that approach, again, echoes the SEC's approach I mentioned earlier, right? Where they're also within the jurisdictional scope of the SEC, setting up a series of roundtables to hear industry input about what areas can the government provide additional clarity on to encourage innovation done in a responsible way.
Andrew, Fei, thank you so much for your time.
Thank you very much.
We're still discussing the U.S. President Donald Trump's recent executive order that the country would create a Bitcoin reserve comprised of select cryptocurrencies. In early March, the White House issued an announcement of the formation of a strategic crypto reserve made up of Bitcoin, Ethereum, Solana, XRP, and Cardano. And joining us to discuss the matter is Henri Arslanian in Dubai. He'll be telling us about what the Trump administration's actions mean for the future of virtual assets in the Middle East and globally. Henri is a returning guest to this program. He's the co-founder and managing partner of 9 Blocks Capital Management, one of the largest institutional-grade crypto hedge funds globally, and the first crypto hedge fund to be licensed by Dubai's Virtual Asset Regulatory Authority. He's also the host of the Future Money podcast. As an author, speaker, and educator, he's arguably one of the foremost fintech experts and evangelists. A TEDx and global keynote speaker, and a best-selling published author, he's regularly featured in global media such as Bloomberg, CNBC, CNN, BBC, and the Wall Street Journal, The Economist, and the Financial Times. His first book, The Future of Finance, The Impact of Fintech, AI, and Crypto on Financial Services, in 2019, was published by the Palgrave Macmillan and ranked as Amazon's global top 10 bestsellers in financial services, and was recognized as one of the best fintech books of all time by Book Authority. Henri is also an adjunct professor at the University of Hong Kong, where he teaches the first fintech university course globally. He also advises many of the world's leading crypto exchanges, investors, financial institutions, and tech firms on their fintech and crypto initiatives, as well as numerous governments, regulators, and central banks on fintech and crypto regulatory and policy matters. Henri was previously PwC's crypto leader and partner, and the former chairman of the Fintech Association of Hong Kong. Prior to joining PwC, he was with a fintech startup and spent many years with UBS Investment Bank in Hong Kong. He started his career as financial markets and funds lawyer in Canada and Hong Kong, and speaks 5 languages: English, French, Armenian, Spanish, and Mandarin. And with that, Henri, thank you so much for joining us.
Thank you, man. What an intro. You guys didn't need to, but I really appreciate it. Thank you very much for having me.
What a career. That isn't even, folks, that isn't even that isn't even the tip of the iceberg. You read his full bio on your own. We'll include it on our website. But no, what a career. What a portfolio of achievements.
I don't know about that, but definitely very passionate. That's what I think is the most important.
You have certainly been very passionate about this. That there's no doubt. So what is the Trump administration's actions mean for the rest of the world if the U.S. creates its own crypto reserve?
Yeah, it's important, I think, to take a step back and to look at the crypto ecosystem in the US in the last couple of years, first to give a contrast of what's happening right now. Back in the day, in the early days of crypto, actually Hong Kong played a very big role, but the US was always a big crypto hub. All of this really changed in the last Biden administration, especially starting as of 2020, where really there's been a sea change in how crypto was being approached, especially since Gary Gensler took the head of the SEC. A lot of things were happening. One of them, we were seeing a lot of regulation by enforcement, which as a lawyer, when I look at it, where you would see a lot of crypto companies would have very publicly state that they want to be regulated, and they would go to the SEC asking to be regulated, but the SEC would basically just start lawsuits against them, and even if not even tell these firms what they had to do. So it was, I have to say, very difficult times for crypto firms, and I think for lawyers as well. For anybody that cares about due process, was very, very sad times actually. All of this changed really in the months before the election, the November 2024 election, when Trump was at a rally in July in Nashville, where he really had a Bitcoin conference, and he really came up with his view on what he's going to do for the crypto and the Bitcoin ecosystem. In there were a couple of promises that were made from day one, the firing of Gary Gensler, to a build out of a strategic Bitcoin reserve. Post-Trump win and his taking office in January 2025, a number of these developments took place. One of them, as you mentioned, is the launch of a strategic Bitcoin reserve. I think it's important to understand there's two things here. One of them is the strategic Bitcoin reserve, and the second thing where the Trump administration put in place is this basically digital assets reserve. We can talk about both in a second. So basically, the point here that was made was that the U.S. will have a stockpile, if you want, of Bitcoin, and that they're never going to sell what they have, and that the Treasury and Secretary of Commerce has to come up with a strategy that is budget neutral to acquire more Bitcoin. Now, what is budget neutral? That is obviously literally the billion-dollar question. It basically, they have to find a way to buy more Bitcoin, but without additional cost to the U.S. taxpayers. And there's a number of ways of doing that. The one that I believe is the most likely is that there's a number of crypto firms that are about to get fines. Many of them, like Binance, got a couple billion-dollar fines last year. Others in the recent months, like OKX, also got fines. In the past, these fines you had to be paid in US dollars, and that is very expensive for crypto firms because very, very few banks are happy to make these transfers, and there's a high cost that Binance or OKX or other firms pay for these transactions. By having these paid in Bitcoin or crypto, of course, makes things easier for the US government. They're able to gather Bitcoin in a budget neutral way, and for the crypto firms, it's easier as well. It's important to understand as well that the Trump administration, in addition to their Bitcoin strategic reserve, came up also with this digital asset stockpile, which includes other assets outside of Bitcoin. That's Ethereum, Solana, XRP, and ADA, which is Cardano, which were the first ones that were listed out there. The biggest difference between the Bitcoin strategic reserve and the digital asset stockpile is that there will be no new acquisition of these digital assets. The government will only gonna buy Bitcoin, unless, of course, the policy changes. So this is actually quite positive because for a couple of reasons. One of them, you're seeing really the U.S. government starting to gather Bitcoin in a strategic reserve way, in the same way they do with gold, for example. Second, this really, I think, eliminates a lot of the career risk for any financial institution, any financial compliance professional, legal professional at one of the thousands of financial institutions in the US who previously were reticent to acquiring Bitcoin or crypto. But now if the government is doing, I mean, I don't know what other excuse as a compliance person you have or risk person to try to stop that. And third, I think, which is very interesting, this really may start paving the way for other countries who to look at potentially acquiring Bitcoin as part of their strategic, as part of their own basket of reserves they have. I personally today, some of the names you see names like Bhutan, for example, that have over $1 billion of Bitcoin. You see countries like El Salvador that have over $500 million of Bitcoin. But also, obviously, the big countries like China. China reportedly has over 100,000 Bitcoin. This is due to these are assets that were seized over the years. In the case of China, it's because of a Ponzi scheme that took place a couple of years ago where the assets were seized. And in the US as well, the US government has over 190,000 Bitcoin that they hold. That's almost $20 billion in BTC. Again, these are assets that were seized in various, whether it's a Silk Road or other hacks that they actually took back. So because these countries already have big stockpiles of Bitcoin, and I think this can pave the way for other countries to start buying it as part of their reserve. Again, if the US is doing it, if you're a smaller country or you don't want to necessarily be left behind, you may want to think twice now and start potentially buying some Bitcoin. So this is really overall what happened and some of the practical implications we may see over the next couple of months based on the strategic Bitcoin reserve announcements from the US government.
Certainly, it lends legitimacy to it if the U.S. government's willing to hold it as an asset. And the idea of a strategic reserve for critical assets and commodities is not new. The government maintains strategic stockpiles of gold and petroleum, and governments and central banks maintain large balances of foreign currencies, for example. And these are meant to act as a hedge against inflation or a supply buffer in case of a crisis, or to alleviate price squeezes and to hedge against currency instability, respectively. But in the case of Trump, this is called the 2024 election was called the election that crypto bought. And I'm wondering, I mean, what compelled him? Because he was against it in his first term. But the allegation is that only certain select crypto was part of designated as part of the reserve. It lends credence to the story we're hearing, that the narrative that Silicon Valley tech bros, select Silicon Valley tech bros, favored by the administration, got to him and influenced his thinking. Like Thiel and the names we hear, Thiel, Andreessen, Musk, the Winklevoss brothers, people of that nature, the names we keep hearing.
Yes. So I think where you're right, I think there's been obviously a sea change. You can really, there's a number of clips that people can find online of Trump basically calling Bitcoin and crypto scam throughout his first presidency, and actually throughout many years prior to his second term.
Was that just Trump before he became educated and became more sophisticated in his views, or are his views being given to him?
It's a good question. I think there's different ways of looking at this. First of all, I think from a purely election perspective, one thing that Trump was very good at, and where the Democrats completely failed, was that the Trump and the Republicans realized there's a big voting base of single issue voters that really care about crypto. Regardless of which metric you look at, you have like a double digit percentage of the young, the 25, 35-year-old population that holds crypto. There's dozens of millions of people in the US alone who hold Bitcoin and cryptocurrencies. So for a lot of these people, the ability to holding Bitcoin and crypto was a single issue or was an important topic. And this happened to also happen in a lot of the swing states. So I think from a strategic perspective, that was a topic that really where a lot of his potential voting base cared about. And I can tell you personally, I know a lot of people in the US who voted for Trump because of this single issue. And the Democrats towards the end of the campaign tried to pivot a bit and open to be more friendly to crypto, but it was obviously too little, too late. So that's one. Second was there's been really within the people around Trump, there's a lot of people that are extremely pro-crypto. I mean, very, very good example. Look at Elon Musk. I mean, there's a reason Doge is called Doge. It's after Dogecoin. People like his Secretary of Commerce, literally the former CEO of Cantor Fitzgerald, they literally own 5% of Tether. You have Vivek Ramaswamy, very big advocate of crypto. His sons, both Eric and Donald Trump Jr., are very big advocates of crypto. And his youngest son, Barron, I mean, literally is very active in crypto as well. So I would even argue, even from my perspective, that people around Trump are actually too pro crypto in many regards. So I think that they acknowledge that this is a industry that the U.S. needs to dominate, and that the U.S. literally has been really was left behind during the Biden administration. Now, there's been also a lot of controversy around Trump and some of the things they did. For example, literally the weekend before Trump was inaugurated, they launched a Trump coin. Honestly, if I launched such a coin a couple of days before I was going to take office, I'd probably be under regulatory investigation. The 80% of the supply is still controlled by Trump. There's very clear indications there was insider trading. The people close who were aware of this were able to trade this and basically had material non-public information on it. So that really, I would say, damaged the reputation of the crypto industry when they saw that, like literally tons of people just bought the Trump coin, which of course lost a big chunk of its value in the weeks and months subsequently. And then Melania Trump did one over the weekend. And even some of the announcements that took place, for example, how the announcements took place of the digital asset stockpile. This was done on a Sunday. It was very botched. I mean, there was a tweet that was issued on Truth Social that didn't even mention Bitcoin. I mean, and there was, again, very clear indications that there was insider trading. People were aware of this, and some big trades were put on the back of this, for example. So I think there's a couple of verticals here that really came in. One is for him from his election. Second, within the Republican base as well, a lot of people are pro-crypto, so I think this helped a lot. And third, there was obviously business interests. Not only the idea of a Trump coin. I actually don't know and don't think that Trump is involved day to day in the Trump coin. But for example, there's a company called World Liberty Financial, which is a Web3 project that is basically owned by the people close to Trump and Trump's family. So I think there's a number of verticals here that probably change his perspective on digital assets. Whether these are ethical, I think we can debate that all day. I think there's been clear violations of maybe not regulations, but definitely ethical issues here. And I think whether there was financial reasons here are clearly there. The Trump himself and his people around him made a lot of money with some of these crypto initiatives in recent months.
What I like about what you summed it up really nicely in a recent article you put out, and we'll be sure to include the link to this. You said, quote, "We should expect criticism, rightly so, regarding how the included coins were selected for this reserve. Bitcoin makes complete sense. One could also argue for Ethereum and Solana. However, the inclusion of XRP and ADA will likely be questioned. In particular, there's an appearance of, quote-unquote, pay-to-play in this selection. Ripple, for example, is known for actively lobbying in the U.S. It donated $5 million in XRP to the Trump Inauguration Fund, and its CEO allegedly had dinner with Trump. Cardano's founder has publicly stated that he is setting up a division to actively lobby and engage with the incoming Republican administration." End quote. I mean, what strikes me is that with Solana and Ethereum, those two platforms are used by many American firms, including important companies like Visa and BlackRock. Then the other thing that struck me, Henri, is that the whole notion of pumping and priming the market, and as you put it, quote, "If the U.S. was looking at building a strategic reserve, wouldn't a better approach actually have been to start accumulating without much fanfare to avoid the rest of the market front-running them? In addition, any such serious action will likely require an act of Congress, and it's unclear whether a president can unilaterally make such a decision." End quote.
Absolutely. I think all the points you mentioned. So first, I've been very critical how these tokens were included in the digital asset stockpile. There was obviously a lot of money spent here on lobbyists, and I think that's pretty clear by now. There needs to be a rationale of how these tokens are included. I think there was no guidelines of how this was done, right? So I think that inherently gives rise to potential conflicts. And of course, second, you're absolutely right. Again, and I've written about this extensively as you just mentioned. If the U.S. really wanted to do something, they should have done it secretly behind the scenes, acquired Bitcoin, and then come out and say, guys, we just acquired all this crypto, which is, by the way that Bhutan has done it, for example. Very few people knew that these guys were mining since 2019, and now they have over $1 billion in Bitcoin.
In stealth mode. Yeah, in stealth mode.
Exactly. So I think this is why this was not, let's say, properly orchestrated or done in a strategic way. And this is why there has been a lot of criticism that whether this was really the way it was done was optimal. I would argue is not, for all the reasons that I mentioned. But overall, I think this is the important thing, is overall, it's still very positive for the Bitcoin and crypto ecosystem. Was it done properly and in the best way? Probably not. But again, compared to where the US was literally a year ago in crypto, where you're having every single crypto company being sued, right? I think still net people in the crypto community in the US is way happier now than they were a year ago.
In the time we've got left, are there any closing thoughts that you'd like to leave us with? I mean, clearly, I mean, the way being quiet and low key is not Trump's style. He's going to make a noise no matter what he does. He likes to announce what he does beforehand, like a calling card. Whereas an astute businessman would not want too much attention, because then that would draw attention, more people would pile into the market, and the price would get, skyrocket, and the market would get away from him. But I mean, I don't know if you want to say any more on that, but in closing, I mean, what should people know about this? That is the fact that the U.S. government now regards this as an asset worth keeping in its reserves. Does that give crypto the ultimate legitimacy it's been seeking all along?
Yeah, so very good. I think there's a couple of things. Bitcoin and crypto are only asset that has been around for 16 years. If you think about that, it was created in the Bitcoin white paper that came out on Halloween Day 2008, with the first Bitcoin being mined in 2009. Bitcoin and crypto are definitely here to stay. And some of the data is actually quite incredible. If you think about Bitcoin is about 10% of the market cap of gold. In December, the AUM in Bitcoin ETFs was bigger than the AUM of gold ETFs. I mean, think about that, right? So I think this really showed that there was actually this real demand. Bitcoin is here. And even seeing some of the large organizations like BlackRock, for example, recommending to clients to have 2% of their portfolio in Bitcoin, which even I would argue is quite conservative, especially with everything happening from a macro perspective around the world. So I think that on that side, things have been really shown how Bitcoin is here to stay, and this entire ecosystem will continue to grow over the next couple of years and decades. Well, I think also it really showed us is the negative power that leadership at a certain organization can have. For example, I genuinely believe that the actions of the SEC in the U.S. in the last couple of years, a part of them lacking complete due process, being a violation of multiple requirements, whether it's constitutional protections or other legislative protections, really set the U.S. back a couple of years for sure. And this really showed that the power that some of these unelected individuals and organizations can have on destroying an industry. For example, the banks were told that if you touch crypto, you're gonna be into trouble, for example.
Right, because it was associated with organized crime and unsavory things on the internet, Silk Road, what have you. But again, it's not. You could strip away the financial instrument, And the same story could apply to any currency, any commodity.
Exactly. And that's exactly the situation, right? So, most crimes still happen in US dollars. They happen in cash, where we're going to ban cash or US dollars because criminal activity takes place there. People buy real estate for money laundering purposes, gold, So I think the criminal activity will always happen. The problem with Bitcoin, unlike other assets or currencies, is Bitcoin doesn't have a CEO. Bitcoin doesn't have a PR team. Bitcoin doesn't hire lobbyists. So I think there's been one of the problems of the decentralized asset is you have nobody kind of advocating for you. And I think that obviously is one of the beauties of Bitcoin, but at the same time, in cases like these, could be detriment. But all in, I think this is a historic period in the history of money. This is a historic period in the history of finance. And definitely, this is a historic period in the history of Bitcoin and digital currencies. And I think all of us, including many of your listeners, I think it's a privilege to being able not only to see it, but also potentially play a role in shaping it. And I find that that's very exciting, and it's an honor as well.
I agree. We're living through the birth pangs of something new, something great that we can't. We have a sense that it's going to impact the world in a big way, but we can't tell just yet. Just like George and Wilbur Wright knew the future had changed once they took flight. They just couldn't see how big of a difference it would make. Henri, thank you so much for joining us.
Thanks for having me.
And to our listeners, thank you. Until next time.